Other than our operation in Rwanda, which lost money, it is very gratifying that all our other regional operations made money in the year 2016. So all around, a fantastic performance by Britam in 2016, driven by very strong performance by all our businesses, both in Kenya and in the region. You'll be aware that our businesses outside Kenya only do general insurance. So Kenya, from an insurance perspective, contributed 82% of the insurance revenues. All the other operations in the 6 other countries outside Kenya contributed the balance of 18%. And that is a significant jump from the previous years. If you look at the other businesses in Kenya, asset management, property, they also have played their part. But remember, our main business is insurance. So the diversification that we actually embrace as a strategy has paid off handsomely. Britam is a major player in the stock exchange. Number one, we invest in various segments of the market, but we also have these 2 very significant strategic investments in the banking sector. Primarily housing finance, which we own 48.8% of, and equity group holdings, which we own 8.2% of. In addition to the bear run generally over the Nairobi Securities Exchange, which saw a drop in the share prices of all the main counters, the investments by Britam in these 2 securities, that is housing finance, or as they call it, HF Group, and equity group holdings, also registered significant drops. Fortunately, over the years, Britam has been reviewing its strategy on the stock market, where you will notice that our stock market investments in 2016 reduced from a high of 20s, the high 20s in 2015 to about 13% in 2016. So we have reduced the contribution or the proportion of equities in our portfolio. Our strategy for 2016 and 2017 and perhaps the early part of 2018 is consolidation. Britam has grown very, very rapidly over the last 4 or 5 years. You remember until 2012, we were just a Kenyan operation. Now with our geographical footprint in 6 countries, we are a very large and complex organization. So we need to consolidate our gains and our operations in these countries. And you don't do that by opening new operations, new branches. You first of all concentrate on those businesses that are already running. So we are not looking to opening new branches, new operations in any of these countries. What we want to do is to consolidate and focus on these entities, give them more support in terms of capital, in terms of management capacity, in terms of building the brand to a premium brand in some of these countries. In other words, growing the business as is by investing in them so that we can then build a stronger business capable of then expanding into other markets